Great. Thank you for your testimony. Our next witness is Brett Martinez, President and CEO of Redwood Credit Union located in Santa Rosa, California. Brett is testifying on behalf of the Credit Union National Association, where he serves on their board of directors. In his 25 years of banking experience, Mr. Martinez served as a senior executive with the California Credit Union League, with a large Southern California credit union prior to joining Redwood in 2002. Mr. Martinez, thank you for being here, and we look forward to your testimony.
Thank you. Chairman Kaufman, Ranking Member Schrader, and members of the subcommittee, thank you for the opportunity to testify at today's hearing. Again, my name is Brett Martinez. My name is Brett Martinez, and I'm President and CEO of Redwood Credit Union, a $2 billion state-chartered credit union serving 220,000 members located in Santa Rosa, California. Redwood is the largest credit union SBA lender in the country by loan volume. Credit unions share the Small Business Committee's goal of increasing access to credit for small businesses through the reduction of statutory and regulatory impediments. At the end of the year, there were over 330 credit union SBA lenders. These credit unions collectively have $800 million in SBA loans outstanding. The average credit union SBA loan is roughly $100,000. Since December 2007, SBA loans have grown by 90% at credit unions throughout the nation. SBA guaranteed loans are important to borrowers who otherwise would not be able to get a conventional loan, but they are complicated to make. They require staff with a special kind of expertise. They cost the borrower and their lender more to make than conventional loans, and they take longer to complete. My written testimony describes how we've been able to use SBA loan programs to help small businesses in our community. We find ourselves in a fragile economic recovery. Small businesses that have survived the recession have largely done so by right-sizing their business and following a path of declining profits. Many have shown losses for several years. As a result of their ongoing restructuring, they are beginning to once again show profits. Ultimately, they are left with a need to restructure their balance sheets, consolidate debt, and free up cash flow to grow their business. We have used SBA programs, including the 504 refinance program and the first mortgage lien pooling program, to help our members stay in business, preserve jobs, and survive through the economic recovery. These programs expire in September, and we encourage Congress to reauthorize them. Otherwise, small businesses will be adversely impacted. My written testimony describes efforts that CUNA has taken to encourage SBA to improve its programs through reduced regulatory burden, increased transparency, and a streamlined application program. In general, we have seen improvements in this area over the last several years. However, other lenders who do not have the experience that we do still may find the process very complicated. To that end, is it important for SBA to continue its efforts in this regard and continue to engage lenders when it modifies SOPs and other policies. Enhancing access to credit for small businesses is an important part of promoting job creation and the economic recovery. There is a significant demand for credit from small businesses. During the financial crisis, credit unions expanded business lending to their members while other lenders pulled back. Many credit unions that contributed to the vast majority of this growth are now becoming severely constrained by the statutory cap on credit union business lending. Redwood is one of these credit unions. We are at 75% of our capacity, and we will only be able to lend to business members for the next 18 months. The cap will not only affect our ability to offer conventional loans, but also our ability to offer SBA loans. That is why we are strongly encouraging Congress to increase the statutory cap on credit union business lending. Representatives Ed Royce and Carolyn McCarthy have introduced legislation to allow experienced credit unions operating near the cap to apply to NCUA for authority to lend beyond that cap. We estimate that the Royce-McCarthy legislation would inject $13 billion into new capital into small businesses in the first year after enactment and create 140,000 new jobs, all at no cost to taxpayers. We appreciate the several members of the subcommittee that have co-sponsored the legislation. Some banking trades strongly oppose the Royce-McCarthy bill. They suggest it's unnecessary because the guaranteed portion of an SBA loan does not count against the cap. However, SBA is not a solution to the cap limitations. Notwithstanding their merits, SBA loans clearly are not a substitute for conventional business loans. At the same time, increasing the cap on credit union business lending would almost certainly lead to an increase in SBA guaranteed lending. Some small businesses, both that qualify for a conventional loan and those that require a government guarantee, would have more access to credit to start growing their business and create jobs. We encourage Congress to enact the Royce-McCarthy legislation. Thank you again for the opportunity to testify today, and I am happy to answer any questions.
Testimony.